Now joining in from Havells to talk a little bit more about the outlook on earnings as well as the margins. Good to have you on board. Thanks so much for taking time out. Now, there has been a revenue growth this time around, which has come in below what the street was penciling in, and that was largely led by your wires and cables segment. Tell us what really led to this weakness and what's the outlook on the electrical consumer durables business?
What we've seen is that the wires and cables segment has grown at about 8%, primarily led by the industrial cables demand. Industrial cables is a smaller business for Havells as compared to switchgear business. And in domestic switchgear, domestic wires business and domestic wires was affected a little bit by a weak consumer sentiment. Similar was the case in the electric consumer durables. However, in the second half of the quarter, in September, we started seeing some activity, better activity. And also, I think this year, the festive season has also shifted to the third quarter. So even in ECD, many product categories like appliances and water heaters, they've shifted to the third quarter. So we do believe that the third quarter, the growth should be better.
Right. Mr. Rai, Q2 was a soft quarter, I guess, because of the shift in festive season as well. It gets pushed back to Q3. So tell me what the demand has been so far in Q3, and then what's the growth outlook for the second half of the fiscal?
We believe that the second half should be better because, the raw material and the inflation is abating, and, the overall positivity which is being seen in the infrastructure development, capex. I think overall the consumer sentiment also should start reflecting in the second half. This is what we believe. Plus, the third quarter generally is the festive season, so should affect the business of consumer durables and lighting as well positively. So we are looking at a better second half in the very short term.
All right. What about the outlook when it comes to the B2C demand? Because that has continued to remain sluggish. Is there recovery inside? What's the outlook down the line?
Yeah, I think, as I already mentioned, that the first half was a bit weak in terms of consumer demand, which affected the offtake of the consumer products. We do believe that the second half should look better. The industrial products, whether it's professional luminaires for us or industrial switchgear, underground cables, that has shown positive growth in the first half, and hopefully that will continue because the infrastructure spends, the capex spends are continuing, and that will continue in the second half as well.
Right. I also want to know about the margins because while they've expanded to 9.6%, wanted to understand what's the expectation from the second half of the fiscal, and of course, what happens to your ad spends too.
As far as margins are concerned, the contribution margins and not just the EBIT margins, the contribution margins are expanding. As I've already mentioned, that the raw material prices are abating, and hence the margins should get benefited. We are seeing quarter-on-quarter expansion, and that will continue in the coming time. As far as the overall margins are concerned, because Lloyd, this is the second quarter is the lowest quarter for Lloyd. With third quarter, fourth quarter demand coming in, we'll see expansion in margins for Lloyd as well. And hence, we do believe overall margins should improve.
All right. And what is the outlook then when it comes to Lloyd's? Because there has been some sequential improvement, but still there's a negative EBIT that you've reported. What is the overall margin outlook? Is the high cost of inventory still a concern?
As I said, Lloyd is a journey. We'll continue to invest in brand building there and manufacturing and R&D. The second quarter, because of low sales for air conditioners, because of the season, that generally is the lowest in terms of margins as well. In the third, fourth quarter, when the demand starts picking up, we'll see expansion in margins in Lloyd. Hence, from next year onwards, we should see a much better margin profile for Lloyd.
Good to hear that, Mr. Rai. Thanks as always for taking the time out and joining us today on your earnings. On that note, we're going to take a very quick break with news.